Hello guys, hope you are doing good and welcome to Trading Chapters 101. Today we are going to discuss about indicators. And what indicators do I use? I use price action, but I mix with some indicators. The most important indicators when I do swing trading is only one indicator, and I will show you how to use it and how reliable is it. So let's check it. The indicator name is moving average. So which moving average? It's 200 moving average. See, you can look the settings and all. I have just moved the indicator right here. See, it's a 200 moving average. Just source should be close and length should be 200. So what's 200 moving average? It's just averaging the 200 candles. So yeah, how reliable it is? I think it's mostly 45 or 46%. 45, yeah, below 50%. This indicator is reliable. So let's look at it. You can see that there is a there is a good up move, and there is after being a good up move, it's touching the indicators by one. See that we are going way back, so let's discuss this. You can see that in 2005 it has given a false breakout here. You see, it has given a false breakdown here, and it has been a good short momentum here. See that there's a good momentum here till 2003, then there's a good up move. After it has given a fake breakout. It's right now giving a down move, but you would be thinking, yeah, it's let's say like you just cross the 200 moving average, just buy that stock. No. And if you can take in price action basis, price action has many bases. So let's look at it. See, in swing basis, it doesn't give a proper breakout in this stock, so that's why it's moved down. See that? That's the most use of price action, but we will talk indicator itself. So that's why I'm saying that's only 45 to 50% here. See that? That's a good up move, and see that there's a down move here. That's a corona. That's not a corona. That's 2022. So yeah, there's a good down move, and after a false breakdown below, there's a good up move. It touches the indicator, and it is going up move. So let's look at the examples right here. See that ICICI Bank is a good example here. See that indicator is not reliable. See, let's see in our daily time frame. You have to do multi-time frame analysis, right? See, let's look at the daily time. I was looking at the weekly time. Well, let's look at the daily time frame. See that there was a bounce here. After that, there was just a breakout from the it just crossed above. We can say that, yeah, 200 moving average, and just a minute, and 200 moving average, and it just break out from it. After the retest, it's moving upwards. See, it tried to touch here, and see that good touch down here, and after that it moves up. So let's see in the selling position. What's happening in the selling position is, see that that's a good breakdown here, but breakdown here, and there's a sharp move down. So let's discuss in and the breakout also. See that there's a good breakout here and sharp move up. See that's why I'm saying that it can only be reliable 45 to 50%. Yeah, if you are a swing trader, if you are a positional trader, you should have this indicator, in my opinion. Yeah, most of the use price action, that would be good, but just use this indicator. This would be a very helpful tool to you. See that there's a good breakout here. See that there's a breakout here, and most of them would buy here, this area, and the stock move down, and all of the stop losses would be hit. So what's happening here? See that there is a strong chance there was a good trend line here. See, yeah, let's adjust the trend line. See that this is what's happening here. There is a trend line here. It has touched down. It's respecting the trend line. It's touching the trend line, bouncing down, touching the trend line, bouncing down. So yeah, that's the thing. Can be reliable, but if you're using this, using this, see, it's not a proper triangle, but yeah, just check it here. Using this, see, it has given a good breakout, and you have a second. See, you have to do multi-time frame analysis in the price action basis, but I'm talking only in indicator basis. So let's look at it. Look at it. See that after a good breakout, and you have a second indication that this 200 moving average also have been broken down. So you have an indication that what is a good bullish run will occur right now. So you are just placing a trade after this breakout, and you would be placing a stop loss here, or below this candle, and after that there's a good 1:3 or 1:5 risk reward ratio trade. So this is a good trade in ICICI Bank. So let's look at here. There can be not a great pattern, not a good pattern. I'm just looking for examples. See that we are just taking the trade for swing basis. This would be a good trade. Look at it. See that there's a good trade. I tried to break out, and it tried to break down, and it break down, and trapping buyers, trapping sellers. Then it given a breakout. So that's the thing about this in 200 moving average. So if we want to look, let's look on the stock too. Let's look on the stock too. ITC, yeah. So let's look at ITC in daily time frame. See that there's a touchdown here. There's a breakout. See that ITC was in a downtrend from here. After what? After it has given a breakout in daily time frame. See that in daily time frame, it's a head and shoulders pattern here, and it has moved down, and it has given a good breakdown. After that, it has also breakdown from here. See that? See, in moving average, if you are looking at the bullish term itself, you see that there is a good breakout. It didn't move that much. That's why you have to always combine it with price action. That would be a good trading strategy. If you are a swing trader, investment trader, just combine it with a 200 moving average. It would be good. So look at it. See that after it break down, you have a second indication that it has also breakdown. It has also broken down from 200 moving average. So you would take a trade, and it has moved 1:5, 1:10 trade. This you can mostly look for intraday trades here in the shorting position, because we can't hold short position in daily time frame. You have to buy options for that, put options for that. I will take that in another lesson, another video. So yeah, look at it. See that stock tried to break down, and it didn't break down completely. Why is that? See in trend line itself. See that? That's why it is. There was a good backup plan here. You can see that this is a trade took a support, and it has moved up. It has given a fake breakdown here in 200 moving average. See, that's what I'm telling you. You can't rely on indicators, but if you combine the indicators, you could you could play a long game in this trading game. So yeah, trading is mostly one thing. Trading, you have to treat it as a business, and second thing, it is a game of probabilities. Trading is a game of probabilities. If you're losing one, you have to gain 2 or 3. If you're losing 20 rupees, you have to gain 40 rupees or 60 rupees. That's the trading game. You will be here for long term. So that's why I'm telling you should always stick to your strategy and never jump to another strategy too. So yeah, this is my video about indicators that I use. So thank you for staying with me here with the video till now, and please subscribe to Trading Chapters 101 and have a blast. Thank you guys.